We begin this segment on debentures issued at a discount with a very simple scenario. The intention in this scenario, it appears, is to introduce us to the name of the account to be debited, to record the loss, or rather the capital loss, the account being discount on issue of debentures. Then again, the instructions on the prescribed syllabus for class 12 of the CBSE specifically provides that discount or loss on issue of debentures is to be written off in the year debentures are allotted. They are to be written off from security premium reserve if it exists, and then from the statement of profit and loss as financial costs. This has to do with Accounting Standard 16. Thus, the key takeaways from this problem are: 1. The name of the account, that is, discount on issue of debentures. 2. The stage in which the capital loss is written off, that is, the allotment stage. Accordingly, we could spread the amounts going into the debenture account and the discount account from the cash received in each stage. We are told that cash percentage received is 25 in the application stage and 20 in the allotment stage. We also know that debentures were issued at a discount of 5%. That means the balance cash to be received is 50%, adding to a total of 95. But we are aware that the company has issued debentures of a nominal value of rupees 100. While the company may have received only rupees 95, the liability of the company stands at a full rupees 100 for each of the debentures that it has issued. This has to reflect in the debenture account. The difference between its liability and the amount that it has received is a capital loss and is to be accounted in the allotment stage under the head Discount on Issue of Debentures. The journal entries passed in each stage will have to reflect this. As we have already seen in the previous segment, each stage has two events and thus two entries. The receipt of monies under the application stage will first be recorded in the debenture application account. This will immediately be followed by a transfer to the debentures account. In the next stage, the allotment stage, the first event will be the due date of allotment. The amount to be recovered under this stage is booked on this date. It is important to recognize that the amount accounted in the debenture account is inclusive of the loss incurred, that is promptly recorded in the allotment stage under the head Discount on Issue of Debentures. Only the amount net of this loss is recorded in the recoverable account, that is the debenture allotment account in this case. Cash net of discount is then received and credited to this recoverable to close the account. The same pattern is followed into the next stage. First, booking the debenture account on the due date by debiting the recoverable account, the debenture first and final call account in this case, and then crediting the same on recovery to close the account.